to Biden, right? Because they basically look at him like, well, we've got this guy under control, and they're going to replace Biden, right? He's not going to live. He's barely fit to move. So it'll eventually just be someone who will come in and replace him. But the point is, the Democrats are going to win, and also Larry Fink's a Democrat, so Larry Fink is a Democratic Party, and he's BlackRock, right? Right? He's literally the most powerful guy on Wall Street. So put two and two together. Everyone is going to conspire to do everything they can to make everything look good, economy, markets, blah, 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 until the election. So that gives you 12 months where long is the only option for your cash portfolio spot, right? The money you have spot should be sensibly allocated into alts, in my opinion, and Bitcoin, but probably with a bias towards alts. And this is the other thing. You definitely want to keep Bitcoin. It's the biggest, it's the best, it's the bedrock of your portfolio. But we have this window of outperformance where alts will go up more. So I think this time is slightly different in that I do think Bitcoin outperforms. Actually, I think it outperforms many alts as well. So I'm still heavy focused on Bitcoin because in a perfect, in a best case scenario, in a perfect storm with the printing, and if gold breaks out, and all this stuff, Bitcoin ETF, if you imagine it's a big hit, it's a big winner, Bitcoin could go way, way, way over and above people's expectations. But regardless, your goal is just to be exposed to the market for the next year, in my opinion. And not be like stuck in the mindset of, anyway, that's basically all I wanted to say. Because when I look at total three, your pullbacks are coming, right? Sure. But I just don't think they're going to be as deep as people think and as I first suspected, right? I think we speed ran the collapse. So a lot of people are looking at our, the problem or the mistake a lot of people make is they compare total three just in a binary sense with like last cycle, right? What you can compare is the cycle of deleveraging and the fear and greed and the euphoria getting flushed. So obviously we had a top, right? That's the exact same every single time, of course. We then sell off into a bounce, we sell off into a bounce. Then we have the capitulation. Now, we had a massive deleveraging, whereas in 2018 it was more of a slow grind. So that happened faster. This happened faster because of Luna, Celsius, uh, Three Arrows, right? That was speed run. So everyone who looks at this and thinks, "Oh, we're here," or whatever, really, we already had that. That was kind of our first rally this year. We dropped back down, and so now we're here. So barring another COVID, which I don't think we're going to get, the alt market is way stronger. You just have to look at it, compare it, not by time basis, because that's, if you compare these by time, you're basically saying that we're just going to have 4-year cycles forever, and we're just not. It's just not going to happen forever, right? So actually, what I look at is our first rally of 2023. Where are we in relation to that? This was our first rally of 2019, right? It took us until August 2020 to break that. It only took us until, sorry about that. It only took us until November 2023 to break it. We're way ahead. Way ahead. The market is stronger and it's moving faster, and that makes sense because I think there's a shorter cycle potential. As I just think that I think the market, the market always looks to the future, right? It's a discounting mechanism for the future. It's forward looking. And so as the market looks forward, I think it's seeing that as we have at least a year of guaranteed easy money conditions, let's run it now. It's like the equivalent of if the Fed, when they started printing in 2020 after COVID, if they said, we're going to raise rates in 2022, right? We're going to raise rates in January, March, 2022. It's like the equivalent of that. When the Fed started printing after COVID, they didn't give any indication of when they would stop. Obviously, said we'll see how we go. This time is kind of different because we all know at least when it's going to go until, which is November 2024. So I think that's why the market is so bullish and every dip's getting bought and people are not hesitating to buy. Because like you're at a party, right? And everyone knows, or at least every smart person knows, when the music's going to stop. So everyone knows when the party ends right now. At the earliest. It might even go later. It's not going to end in June 2024. That wouldn't make sense. Because if the economy's contracting and the markets are declining going into an election, that's not good. So it seems like we could just, we're going to have this AI bubble and this stock market bubble and this crypto bubble manufactured until at least the election. Because what is Biden going to say? What's Wall Street going to say? What are these people who want the Democrats back in because they don't want Trump? They're going to say what? The trade-off is we inflate a bubble, but we get elected, and then the bubble pops. Cool. Then we have 4 years to deal with it. I mean, it's a trade-off they're all going to make, in my opinion. So I think you want to view alts as not like that we have to do this or we do this or that. I think you just want to view it as it's broken its bear market range, its 2023 highs. It's also broken this previous high, which is important. But look at it over here and just keep your eye on 400 billion, I think, right? Don't get me wrong. I think there's a big correction coming, but I don't think it's necessarily going to be as big as people want it to be or as big as they think it will be. Because 500 down to 400 is about 20% for the index. That's going to take alts 20, 30, 40%. Shit alts down more than 50%. And I'm sure that will come. I just don't think we get lower than that. Right? And we might even go higher first. And that's the thing. If we go higher first, if we push up to fucking 560 and drop all the way back to there, well, that's like your big crash. It doesn't seem like it, but it is. It's like 30% on the index is going to be 40, 50, 60% on alts. And even with that, I think that's just going to get bought up because it's just buy the dip. Everything's buy the dip right now. I think it's going to continue to be buy the dip. And so I think you want to be long until whatever coins you're in are like really pumping and overextended. Then you want to take some profit. Obviously, the goal is not to never take profit. But if you keep making money, if you have a job and you're bringing money in, at least how I'm approaching it is basically max allocation. And if I'm bearish alts, I'll be back in Bitcoin. And then I get money in every month or a combination. Every week if it's trading profits, every month if it's from business. And I'll just decide each month, do I want to put this into the market right now or do I want to wait? I think, and this is sort of contrarian, which I guess you don't ever want to be contrarian just for the sake of it. But to say that there's not going to be any significant correction for the next year, I think is pretty contrarian. And that gives me a little bit more confidence in it. It's always, you always feel nervous. Not nervous, the wrong word. It's always risky to say in crypto that there won't be a big correction. But I genuinely think there won't be a big correction for the next year. Because this is where we're going now. You can't be stuck, right? You can't be stuck in bear market mindset. Because when you look at like post-COVID, which is where I think we are. And when I say that, I mean, post-COVID was what? The Fed said, easy money, right? Right now, the Fed's saying easy money. Not because they're printing loads, not because interest rates are going to zero, because they said, we're reversing the hikes we've done and we're draining the RRP, which they're already doing. And the government's printing, so fiscal stimulus is coming too. And it's all just designed. Biden wants to give money to 500,000 homeowners. It's just money, 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 money for the next year. So that's why it's like COVID. And everybody else who's on the sidelines is waiting for the next COVID for the Fed to cut rates. But the Fed have already said they're going to do it. So if you're waiting on the sidelines for the Fed for COVID 2.0 to come, I just don't think it's coming. So I think a 20% correction is a good correction to buy. And that's like Bitcoin, I mean. Also go down more at that point. But Bitcoin hasn't had any significant correction all the way up. Biggest dip we had was 9% over there and then 10% here. So a 20% correction would literally be twice as big as any of those. And so that would represent a massive correction for this current phase we're in. Don't compare it to Bitcoin of 2018 or 2020. It's a different asset. It's also not up that much, right? We had a massive correction in May 2021, but that's after we went literally up only for 11 weeks and the total cap went up 150%, right? Also, that was from this level, which we've just broken out from. So, like, isn't that possible again? Like, how is that not possible? Of course it's possible. And I think people don't want this to happen because they're sidelined. Right? It would actually be just pretty rough on most people if that happened. This whole thing about speed running the cycle. Because then where do they buy? Right? Where do they actually buy if it goes like that? If alts are back at 1 trillion by the halving. It looks ridiculous. But what's the alternative? Oh, we dip back from here, we reaccumulate, it goes slow, and like, what do you mean slow? How can alts do this until the election? Until the election is our, like, until the election, that is our window to pump. So I don't know. Is there a counter narrative to this? Does anyone really want to challenge the assumption that the Fed are not going to do everything they can to pump the market?